Imagine this. You're 28 years old. You're sitting in an office in Singapore, and with just a few clicks on your computer, you're about to destroy a 233-year-old empire. This isn't fiction. This isn't a movie plot. This actually happened. One man, one trader, brought down Britain's oldest bank, an institution that financed the Napoleonic Wars, bankrolled empires, and helped America by half its territory. Over $1.3 billion in losses. Gone. His name was Nick Leeson. The bank was Barings. And this is the incredible true story of how greed, deception, and one hidden account numbered 88,888 collapsed a financial giant that had survived for over 2 centuries. Let's dive in. First, let's talk about Barings Bank itself. Founded in 1762 by Sir Francis Baring and his brothers in London, this wasn't just any bank. Barings Bank was Britain's oldest merchant bank. So powerful in the 19th century that it was called the sixth great European power because of its massive influence. Think about that, a bank so powerful it was compared to entire nations. Barings financed the Napoleonic Wars, helping the British government during some of history's biggest conflicts. But here's where it gets really interesting. They played a crucial role in one of history's biggest real estate deals, the Louisiana Purchase in 1803. They helped the United States buy massive territory from France for $15 million, literally doubling America's size. And get this, Britain was actually at war with France at the time. The bank managed money for royalty, including Queen Elizabeth II's personal accounts. For over 2 centuries, Barings built an unshakable reputation for stability, prestige, and trust. But by the late 20th century, like many old traditional banks, it was chasing higher profits in the booming, fast-paced world of derivatives trading. That decision would prove fatal. Now enter Nick Leeson. Born in 1967 in Watford, England, to a working-class family. His father was a plasterer. Leeson wasn't born into privilege. He left school at 18 without going to university. He started his banking career at Coutts, then moved to Morgan Stanley, and joined Barings in 1989, at just 22 years old. He was ambitious, charismatic, hardworking, and he rose through the ranks quickly. In 1992, Barings sent him to Singapore to run their new futures trading operation on the Singapore International Monetary Exchange, or SIMEX. His official job was arbitrage, exploiting tiny price differences between Nikkei 225 futures contracts, traded in Singapore and Osaka, Japan. It was supposed to be low risk, safe trading, just executing client orders and making small proprietary trades to capture those tiny differences. But here's where the first critical mistake happened. Leeson was put in charge of both the front office, which is the trading side, and the back office, which handles settlements and accounting. In most banks around the world, these two functions are strictly separated to prevent fraud and catch errors. It's a basic check and balance. At Barings, lax management back in London allowed this dangerous overlap. Why? Because they saw Leeson as a rising star, who was making big profits, and they didn't want to slow him down. Things started going wrong almost immediately. In 1992, one of Leeson's junior traders made a simple mistake. She sold 20 contracts instead of buying them. At first, it was meant for small errors and mistakes, but Leeson quickly started using it for something much more dangerous: unauthorized speculative trading. Instead of the safe arbitrage he was supposed to be doing, he began betting huge amounts on the direction of the Nikkei index. His main strategy was called a straddle, selling options and essentially betting that the market would stay stable and not move much in either direction. In 1993 and 1994, when the Japanese market was relatively calm, this strategy worked brilliantly. He made massive profits, reportedly accounting for 10% of Barings' entire annual profit in 1 year. He was given huge bonuses, £130,000 on top of his £50,000 salary. Back in London, the executives loved him. They called him a genius. They gave him even more freedom and capital. No one checked his work closely because the money was rolling in, and everyone was happy. But here's the problem. When trades went bad and he lost money, instead of reporting those losses, he hid them in the secret account, 88,888. To cover the margin calls, these are the daily payments that exchanges demand when you have losing positions. He forged documents, lied about client funds, and kept requesting more cash from London headquarters, always claiming it was needed for client trades. By the end of 1994, the hidden losses had already reached £208 million. That's about half of Barings Bank's entire capital. But Leeson didn't stop. He couldn't stop. Like a desperate gambler chasing his losses, He kept betting bigger and bigger, hoping one massive win would let him recover everything and erase the evidence. Then, disaster struck. On January 17, 1995, the Great Hanshin earthquake hit Kobe, Japan. It was a devastating 7.2 magnitude earthquake. The Nikkei stock index plunged over 1,000 points in just a few days. Leeson's massive long positions on the Nikkei, remember, he was betting the market would rise, or at least stay stable, were absolutely crushed. In a state of panic, he frantically tried to prop up the falling market by buying huge futures contracts, attempting to single-handedly push prices back up. At one point, he controlled 85% of the open interest in some contracts. Think about that, one trader, controlling almost the entire market. But the market kept falling. Nothing could stop it. The losses exploded exponentially. By February 1995, the losses had reached £827 million. That's over $1.3 billion. More than twice Barings Bank's total capital. The bank was technically bankrupt, and Leeson knew it. On February 23, 1995, Leeson realized it was finally over. There was no way out. He left a simple note on his desk that read, "I'm sorry." Then he and his wife Lisa fled Singapore, flying first to Malaysia, then to Thailand, desperately trying to make their way back to London via Frankfurt. Back in London, Barings executives discovered the truth on February 24th and 25th. The secret account. The massive losses. The lies. Everything came crashing down at once. They tried desperately to arrange a bailout. Even the Bank of England got involved, trying to coordinate a rescue, but the hole was too big. No one could cover losses that massive. On February 26, 1995, Barings Bank was officially declared insolvent, a 233-year-old institution that had survived wars, revolutions, market crashes, and depressions gone in an instant because of one rogue trader. The fallout was absolutely massive. The Dutch banking eventually bought Barings' remaining assets for just £1, £1. They saved some jobs but dismantled the Barings name forever. Thousands of employees lost their jobs. Investors and creditors took enormous financial hits. Nick Leeson was caught by German police in Frankfurt on March 2, 1995, as he tried to fly back to England. After extradition battles, he was sent back to Singapore to face justice. He pleaded guilty to fraud and forgery charges and was sentenced to 6.5 years in prison. He served 4 years before being released early in 1999, after being diagnosed with colon cancer, which he thankfully survived. While in prison, he wrote his autobiography called Rogue Trader, which became an international bestseller. It was even turned into a 1999 movie, starring Ewan McGregor as Leeson. So what went wrong? How could this happen? There were multiple catastrophic failures. First, there was no separation of duties. Leeson controlled both trading and the accounting that was supposed to check his trading. Second, there was incredibly poor oversight from London. Management ignored multiple red flags, like the huge and frequent cash requests, and even warnings from internal auditors. Third, greed blinded everyone. The profits looked too good to question. And fourth, there was weak risk management across the board. No real limits on position sizes, no verification systems, no checks and balances. The lessons learned from this scandal were enormous. It revolutionized banking regulation and internal controls worldwide. Banks now strictly enforce separation between front office and back office roles. There are much better internal controls and more frequent audits. Risk management systems became far more sophisticated and robust. The Bank of England conducted a major investigation, and their report led to significantly tougher banking supervision across the United Kingdom and internationally. The Barings collapse popularized the concept of rogue trader. Risk indirectly influenced regulations after later similar scandals, like the Societe Generale case in 2008, where trader Jerome Kerviel lost nearly $7 billion. Today, Nick Leeson has reinvented himself. He's now a public speaker who talks about risk management, corporate ethics, and compliance. He lives in Ireland, remarried, and has children. In interviews, he says that modern compliance systems and technology would catch someone like him very early today, probably within days or weeks, not years. But the story remains one of the greatest cautionary tales in financial history. It shows how one person, when left unchecked, can destroy centuries of history, trust, and stability. It's a reminder that no institution is too big, too old, or too prestigious to fail when basic controls break down. What do you think? Could something like this happen again today, with all our modern technology and regulations? Or are there still gaps that a determined rogue trader could exploit? Let me know in the comments below. And if you enjoyed this deep dive into one of finance's biggest scandals, make sure to like and subscribe for more incredible true stories from the world of money, power, and deception.